morning, guys. Today is Wednesday, July 3rd, 2013. I just wanted to quickly revisit those trades we were looking at the last few days. And what I want to do is introduce the higher time frame into the trading here. We've been looking at the daily chart, which we got here on the right. And Intel, as you can see, we haven't quite hit that first profit target. Looking right around 2460, 2470 level for that first profit target. But I wanted to point out, I just wanted to point out the higher time frame. That it's good to look at the higher time frame when you're trading off. Like if you're looking at a daily chart, look at the weekly chart. If you're trading off a 30 or 60 minute chart, look at a daily chart. If you're trading off a 3-minute chart, look at a 30-minute or 60-minute chart as for higher time frame, just to give that extra confidence. And I mean, chances are surprises tend to happen in the direction of the higher time frame trend as well. So as you can see here, Intel is still pulling back. We're still in this trade. We've got the stop half a range below the low. Okay, half a range again, about 26 cents below the low here on 23.15 on the stop for Intel. It's just chop right now. It's been like this for a couple days, so this trade's not really working out like like Occidental did. Let's look at Occidental real quick. I lost it. There it is. As you can see, our Occidental, again, you may have been filled in there if you're front running that 50% fibs at pretty much near the high of the day yesterday. The market ran up just shy of that 50%. As you can see in here, here's your weekly chart. The thing is I mean, we're beginning a new trend on the weekly chart. So this is a good trade. It's still good to hang with it. I mean, you have every reason. It's not like we're trading in a downtrend on the weekly chart. So the higher time frame is just changing trend to the upside. Could the market pull back a little bit more before continuing higher? It might. If that's the case, then you'll have another opportunity to get back in if it breaks down and then moves back higher. I mean, one of the biggest questions in trading is how far is the market going to pull back? And obviously, I mean, no one knows for sure. So, if that's the case and we continue lower, we'll stop ourselves out, half range below the lows here, below this pivot low, and then potentially get back in if the market sets itself up to do so. So, one of the things to do, though, if you wanted to, what I like to do is to filter, not necessarily filter out trades completely, but again, and I think I mentioned this the last couple of days, is to look at the higher time frame. And if you're trading with the higher time frame, go ahead and trade as normal, your normal entries, maybe even be a little more aggressive sometimes. And I showed you yesterday the other couple moving averages, the 8, 13, 21, that would actually put, that would allow you to buy, that allow you to get in more aggressively. Even if you just use the mid counter in the 21, sometimes it's a little more aggressive entry, and then obviously the most aggressive entry would be the 8. Now when you're trading against the higher time frame, you don't want to take those aggressive entries because the probabilities aren't stacked in your favor. But when you're trading with the higher time frame, the probabilities are stacked in your favor to trade it more aggressively. Okay, see, for example, this is May. The trend had just started to change. You see, we got the break up through here. We got a higher, we've got an active high. You got a higher swing low. The market took out this pivot high. Okay, and this is back on May 3rd. Now, if you go back to May 3rd, see right in here, that first pullback, that 8 EMA should, I'm sure that 8 EMA entry would have gotten you right in there on that trade back in May. Let me go to form analysis techniques and turn on that 8 EMA. Yeah, see, that would have got you right in this area, buying it off that 8 EMA, right in here. And then once you take that entry, then look for the deeper pullback. Then, even though it puts in a new high, look for the deeper pullback. Don't be so aggressive anymore. Because if you've already bought it in this area, now look for that deeper pullback into this area, your normal pull where you would normally look to enter the trade. And you can see that worked out. And guys, I mean, this is just I'm not just pointing this chart out because it worked out great. this happens a lot where you get that first entry off the 8, it's the highest probability, and then the second time around, if the market breaks a new high, I'm looking to buy at a little bit deeper logical level of support and so forth. And these moving averages are just levels of support that you can look down to the market. Now, when you're trading against the higher time frame, you know, you're looking for the deeper pullback, the 21, 34, 50 moving average, or mid to lower, mid to upper counter channel bands, or even the moving average, the 79, 89 moving averages like Todd uses in here. So, all right. So let's quickly look at, again, the stop on this is you're still waiting for that potential second target to get filled. Let's look at AT&T real quick. Still waiting. We got a target right around 35, just above 35, or maybe around 35.15 or so. In fact, if you had that, you may have just got filled the other day, yesterday at the low. So you may have been filled on that if you front run this 50% by a little bit, or if you're going right on the 50%, you're not quite there yet. And now this on the higher time frame. AT&T is actually pulled back into support. So you've got an outside bar here. You got the close it's above the mid range. It's not the top quarter, but by the fact that on the higher time frame you're trading, still in an uptrend. So this is actually in divergence with the daily chart. What I would look to do in this situation with that pattern yesterday is move your stop down, okay? And you got a half range at 60, let's say 62 cents, so 31 cents above the high here, so 36.30, 36.30. I'd be looking for a stop maybe around 36.30, 36.35, okay? And just tighten that stop up, okay? All right, you got the pattern, you've got a pivot high in here, you've got an outside vertical bar with the close above the mid-range. Your higher time frame is still in an uptrend. It's pulled back to support. So this may end up acting as the higher time frame support, may end up holding in here, and you may get more follow-through to the upside. All right. On Dominion Resources, again, same scenario as AT&T, very similar here. The higher time frame is up, okay, based on the chart on the right here. We pulled back into some longer term support. It kind of broke down here, so here's resistance, and this confirms it. Market rallies up to it, pulls back a little bit, and finally breaks above it right in here. So this actually, that confirms that you got right around 53.5, 53.75 is logical longer term support. And we've kind of pulled back in that area, got a little bounce, got a bearish outside, so you should have a tight stop on this anyways. 50 cents, your average range is $1, so 50 cents above the high this bar yesterday or day before. So you're sitting right around 57.85 with your stop in here, or yeah, 57.85, right around here in your stop. Okay, first target again that 50% mark or just in front of it. So maybe later today if this market does sell off, or tomorrow, maybe, or actually tomorrow's July 4th, so maybe on Friday we get that follow through. We got unemployment numbers coming out on Friday. So, or non-farm payroll report. So, we got some big numbers coming out. So, we'll see what Friday's going to be like. But let's quickly look at Walmart. Yeah, Walmart again. Higher time frame is in an uptrend, and we're trading short off the daily chart. So, guys, again, there's nothing wrong with being a little bit more aggressive on the trade management. That first profit target was hit. That's a good. So that's a plus. Second target, we're looking right around in, was that 73.60 or so for that second target. In this situation, you've got a pivot high in here. Okay, half a range is $1.18. So what is that? 59. Say 60 cents above the pivot high here. 60 cents above this pivot high. So right around 76.75 on the stop. Okay, so you got a relatively tight stop on that. With an entry somewhere around in this area. So looking for that first and second target. First was hit again, and then just looking for that second target. So yeah, again, when you're trading with the higher time frame, sometimes you need to be more aggressive on your entries, otherwise you miss them because the market's just, you get these shallow pullbacks when the higher time frame and the smaller time frame are lined up sometimes. And then when you're trading against the higher time frame, you don't be so aggressive on your entries. Pull back a little bit. Look for the more conservative type entries, and also manage the trade potential a little bit more aggressively. When you're trading with the higher time frame, you can look for the longer profit targets. If it's a beginning of a new trend, look for the longer targets if you wanted to. If it's a mature trend, you're just going for real quick base hits. That's it. So, all right, guys. I hope that helps. Y'all have a great holiday, and Todd will be back in the office on Friday, and I hope that you're able to pick up some things, some golden nuggets over the last week or so, and we'll see you guys. We'll see you guys around. Thanks. Bye for now.